way financial products are accessed is about to change dramatically because customers increasingly expect services to be more personalized and easier to use. Soon, many more of us will be able to access wealth management services at any time and any place within a single click. In order to get to this, banks are already starting to collaborate with third parties by using application programming interfaces known as APIs. In the finews studio today is Sven Siat, who heads the B-Link platform at SIX. He will talk to me about the opportunities of embedded finance and open wealth. Hello, Sven.
Hello, Jade.
Let me start by asking, what is embedded finance and who is it for?
A simple way that helps me to understand embedded finance is to look at it that instead of customers getting their financial products, walking to the branch, logging into mobile banking, e-banking, they're going to get their financial products embedded in everyday life. So what does it mean? An example. We're looking at a startup in Switzerland, Kaspar und, and what they're doing is every time a customer pays with their card, they round up the amount, put that to the side into savings, and then invest that savings according to the preferences of the customer. So investing happens automatically while I pay every day. And this is really how we look at embedded finance, and that shows embedded finance actually is a broad trend, and it's for everybody. We have the retail, the savings example is for the retail customers. We see real estate brokers embedding financial products for their customers that buy and sell real estate. And we see communities around financial literacy of women, around gamers, that are slowly integrating financial products also in the community offers.
And why do financial institutions need to engage more with clients and get involved in their daily lives?
The way we look at it is they don't necessarily need to engage more, but it's about engaging in a smarter way, and it's about understanding what's the customer behavior that's changing, so what are the expectations, and how do I then embed my services in there. And there's also a smarter way in it, because ultimately what the banks also might not have to acquire the customers because they're working now with the brand. So it's about engaging differently and smarter.
Now, Switzerland has different legislation around APIs than the EU. Can you explain what this Swiss approach is, and maybe say something about the progress wealth managers have made in this area? Yes.
It's important to have a quick look at the EU first. In the EU, we have a regulation that forces banks in a specific area to open up, that is payments. So the result is you have a wide adoption of open APIs in payments, but moving beyond that is quite hard. In Switzerland, we do not have a regulation, we have a market-driven approach. That simply means the market players get together and determine where's the biggest value that they can deliver. And since we are in a wealth management country, we decided with the Open Wealth Association to offer open wealth APIs. So we move beyond payments already today, but it's also important to understand that we still have challenges. Right now, we have in the Open Wealth Association a lot of participants that are defining the standards, sitting at the table. We have a few participants already live on B-Link, actually using and implementing those APIs. The challenge that we are working on now is bringing more of the participants from defining the standards to using and building the embedded finance offerings.
I'd also like to ask if embedded finance can encourage sustainable investments.
The short answer is yes, I believe it does. There's two elements that I look at. One is embedded finance will bring new investors that have not invested before to the space. In general speaking, also younger generations that tend to be more inclined towards sustainability and ESG. The second element is existing investors will get more transparency. One good example is Glow Balance. It's an offer where I can upload my existing portfolio, and it's like a Google Maps of investment. It shows me where are you invested, what's the ESG footprint, and that allows me to make changes to my portfolio and hopefully bring us all towards a more sustainable investment strategy.
And how is revenue made in all of this? Is it the platform provider, the service?
You mentioned already the different providers, and it's important to understand that. In embedded finance, there's in general speaking two providers. The provider in the front that has the customer interface that acquires the customer and services the customer, and the infrastructure provider in the back that also takes care of the license. Revenue naturally is shared between these two. The customer pays the provider in the front, and they have an agreement with the provider in the back, usually a revenue share agreement. Now, it's important also to know that cost is shared. The provider in the front is taking care of customer acquisition, servicing the customer, while the provider in the back doesn't have to worry about that cost, but the provider in the back operates the infrastructure, now gets access to a larger set of clients, and thus can more efficiently operate the infrastructure. So it's about sharing revenue, but also sharing cost.
So sharing and collaboration. Are there challenges that financial institutions face, adapting to this new way of doing business?
Yeah, it's a very, very key question that we also ask ourselves when we talk with clients. And we see two. One is the mindset shift, and one is the technology shift. The mindset shift is about what you just mentioned. In the past, the bank's brand has been front and center in the client interface. And now it's about a world of collaboration. Integrating products into other value proposition of brands also means that sometimes the brand of the bank is not so much front and center anymore. Second one, technology shift, simply means it's about building out technologies that allow us to easily connect and interlink these services, and that's simply a technology and capability that banks are still in the process of building up.
And who owns the client in all of this?
Yes. We hear that question a lot. What we believe for banks, the better question that resolves some really important insights is what's happening with the client, how's their client behaving, and how do we stay relevant, and how do we still serve the client? And embedding financial products into value proposition and brands where the client is part of the answer. Now, I think it's important to note that that doesn't mean that banks should just give up the client interface. We actually see very interesting concepts where, for example, the Sterling Bank in UK, in their home market, they own the client interface. They're front and center, as we said. And now that they expand to the EU, they're approaching an embedded strategy where they are in the back, embedding their services in other value proposition of other brands. So the hybrid model is a really interesting one from our point of view.
And Sven, can you tell me, will embedded finance lead us into the metaverse?
I think it will not lead us into the metaverse, but put it differently, as we move into the metaverse, if we move or when we move into the metaverse, in everyday life, we spend more time in the metaverse. In this scenario, of course, embedded finance will follow. The more we pay in the metaverse, the more we interact with other brands in the metaverse, then finance products will also be embedded there. So you could say that banks that are engaging with embedded finance right now are prepared for a possible future where we actually live more hours of the day in the metaverse.
Possible future in the metaverse. Thank you very much, Sven. It was a pleasure speaking to you.
Thank you.